Hey traders, Bish here. Welcome back to Market Wrap, week ending 1st of March 2019. We're just going to go through some key themes, what happened last week, and then we'll go into some charts to see if there's any opportunities out there for the coming week or so. We had PMIs released last week, Q4 GDP as well. Key themes, obviously, Europe still weakening based on data, and also China and US trade talks, which has been a theme since the beginning of the year. PMIs, US, Europe, and Japan all indicated some slow growth this month. We're starting to see if this is the real global slowdown that all economists are actually predicting. So we'll see what happens in the next 3-4 months. I mean, that's going to be very, very key. I mean, you've seen US, they come out, the Atlanta and the New York Fed, they came out earlier this week and they revised GDP figures for Q1 to be much lower than 1%. And even Goldman Sachs, they expect Q1 figures to be less than 1% growth. Now, this could be temporary, and we have a rebound in growth in the second quarter of 2019. But if this is a key theme of global slowdown, which is happening across the world, then we could see a potential recession coming through in the late parts of 2019, early 2020. So there's something really to look out for. I mean, we do have earnings slowdown. We had data dependent based on manufacturing, and Q4 GDP have been slowing as well. Earnings has been slowing. So we have seen a slowdown potentially in the European and the other part of Asia have been slowing down. It's now over to the US to see if it's going to be a knock-on effect, and it does show that it's starting to slow down now. So we looked at the manufacturing for Europe, and it officially went into contractory territory for the first time since 2013, going below this 50 at 49.2. Japan's PMI also dipped below 50 for the first time since mid-2016, and this is all to do with these global trade tensions that's going on between US and China. And if you look at GDP on the Eurozone as a whole, is exports are 19% of Eurozone GDP. With Japan's GDP, its exports are 14% of its GDP. So this is just not a battle between China and US. It's a global effect on every nation. So when you look at US, obviously they do share a GDP of roughly half of Europe and Japan when it comes to their exports, but don't think it's not immune to what's happening between the two nations. Ultimately this will have a knock-on effect on their exports as well. So just keep a lookout for that. The markets at the moment are not pricing in anything. They're actually pricing in a positive outcome for the trade talks between US and China. Yeah, it's kind of a mixed bag at the moment with the markets, and we're just going to see what happens in the future. Okay, over to UK. Not really much. Obviously, we have the Brexit talks. We're going to go into that probably next week as we get closer to the vote. But the big one here was we've seen Marks and Spencer's teamed up with Ocado, the UK online supermarket, and they're looking to offer their products online. So they're looking to spend around £750 million for 50% of a joint venture with Ocado, that's Marks and Spencer's, and looking to house all of UK with its online activities. So let's look at what happened in the markets globally. It's been a really big mixed bag over the week, very tough week as well if you are just trading on a weekly basis. But if you see less than 1% in the US market, very flat to be honest. So you would have been whipsawed out of positions all day. FTSE had a 1% down week, closing 71 points down. DAX had a good week at 1.3% up, but the rest of the European markets did have a up week, and Asia, mixed bag as well. It's pretty much up to flat. So nothing to really report there. We're just gonna see what develops in the coming week or so. Currencies. So currencies, mixed bag again. We've seen euro having a very unchanged week really. It's just 0.3%. Sterling had a good week at 1.2%. So did the yen. Sorry, dollar yen, as in the yen did fall 1.1%. We had the Swissy strengthen just a little bit, but again it's negligible. But if you look, what you want to be looking at is the over 1% to 2% moves. They're the moves that you want to be focusing on. Anything below that, it's very negligible, because you can say it's pretty much flat. So you can look at the yen. Really probably was the worst of the currencies during the week. It got sold off, so you would have been good putting your money into yen last week. So selling the yen, that means buying USD JPY, buying the euro JPY, and buying the sterling JPY. It was very good, good trade to be in. Again, this is quite an interesting chart as well. So this is the ISM manufacturing PMI versus the stock markets. Now you can see that it's quite correlated, the PMIs, with the S&P 500. You can see in the past 3 years it's been quite correlated. Every time we see PMIs go up, we're going to see the stock markets going up. But now what we can see is PMI starting to contract and go a bit down, and we've seen the stock markets going up. So obviously this divergence either is going to close, which means the stock markets will either follow down, or the PMIs will have a rebound in the coming months, which will then start to go in tandem with the stock markets. So we're going to go into some charts now, to give you an overview of what I'm seeing in the markets, what potential trades are out there, and I'll see you then. So here's the S&P 500 chart. This is the weekly chart. So as you can see, we're pretty much in a uptrend at the moment. You could say this is pretty much a sideways trend, and the past 8-9 weeks we've been up from the beginning of the year. So we're now at the critical resistance level at the 2800. So this is what traders are probably going to look out for this week. Either we blast through it and we go to the next region, which I believe could be around the 2875, 2900 level, or we fail at this resistance and we start to roll over, possibly go down either a 50% retracement, or make new lows. So this is something that we're going to be looking at this week. Obviously, we've seen all the trade talks probably being priced in now. All the other Fed talk has probably been priced in now. So it's now against the momentum of the market and how many buyers will step in at this particular point. So this is what we're going to look for. So this is the weekly. Let me just go down to the daily so we can get a bit more information on what we actually see. So as you can see here, we're definitely at resistance level here. This grey box area, you can see that it's been hit 1, 2, 3 times, and then we failed. We've hit it again last week on the 25th. We've failed. Now we're going to do a second attempt. It looks like probably might even open tomorrow on a gap up. So this is going to be very, very key to see what happens. I mean, obviously I think that these stops at 28.20 probably will be taken out, and then we're going to see what happens after that. Now, if this does happen and we see momentum, what I want to see in this market over the term would probably be something like, if we go up here and we come back down and retest. So if you retest and then go back, then I'm looking at probably testing the 29.42 level, or even this level here of resistance, band resistance around the 28.75 level would be something to even look at. But this is what I'll be looking at coming into the medium term. Now, seasonality wise, March and April seems to be quite bullish, so it's something to really think about. But we're at a critical point of the market at the moment. Don't fight it at all. I mean, at the end of the day, we've been trajectory up since January. I am cautious around this area, but if I do see that we start to get a bit more price momentum to the upside, then I'll be inclined to probably go long on a rounded retest. Let's just go to a 4-hour and see what we could be looking for here. I mean, what you want to be using is probably this line of support here as a failure zone. If we take out this, come down, and then we can look at the 26 area, because I think this will tell you if we are going to fail. I mean, obviously we'll be breaking this 10-week trend line also, but this area underneath here is definitely key when it comes to the market. So have a look at a break. Let's get the price up here. Where's the price? Here we go. So you want to see the 27.63 level taken out. You probably want to see a retest, and then we'll go down. Again, look at 2700 level, 26 level would be first targets for long-term resistance. Alternatively, if this carries on bullish, then I would be looking at a short-term target on a rounded retest of a 100% retrace of this. If I can get this to work, here we go. So this could probably end at the 28.26 level. If not, we're looking at the 28.57 level here. This is where I'm expecting this rally to end, and that will be probably good shorting areas if we do get that. But again, I mean, cautious. I mean, if you're looking to scalp long over this, then we could probably take out the 28.20 level, probably go up to this 100%, and then fail. So if we do get a rounded retest of this breakout level, then you probably want to see some bullish momentum pricing, and then take control of a long or very tight stops. But overall, I mean, I think this market is pretty much overstretched. It's overbought on all the stochastics. So I'll probably favor a short again. I know I've been bearish for the last few weeks, but I would look for critical price level at 27.65, 27.60 level to really break, and then I'll probably initiate a short all the way down maybe to the 26 level, and then let's see if we get momentum further. So in the meantime, I would say, well, if you look at here, you probably wouldn't want to buy anything here. I mean, like we pretty much choppy, since 21st of February. There's pretty much a range. If you're looking at short-term bullish price action, then I would look at, well, we've taken out these stops. We're definitely probably going to take out the 28.13 stops here. So yeah, I mean, just caution here at the moment. Don't I wouldn't look for any big moves until we've really blasted through these that resistance area in the grey area, and then look for a rounded retest for a long, or even go for a Fibonacci 50% or 61.8% retest. Okay, so that's the S&P 500 at the moment, and we'll have a look at that to see if there's any opportunities present itself next week, whether it's long or short. Okay, so let's go on to FTSE. FTSE weekly, pretty much sideways. If you look at the sideways action, you want to look at the 65.42 level. I think that in all honesty, I think FTSE is bullish in my opinion. If it was me looking for any kind of buy, I'd look at a 50% area. So anything around the 6900 area would be a good buy opportunity. Obviously, I'm mindful because this is the 250 week moving average, and every time we close below, there's been some follow through, but we haven't seen major follow through in the past week. So this looks to me that it's a bullish price action. We've come above it now. I would look for a retest down and then go back up again. So how would I play the FTSE? Again, I just said basically we'd probably want to look at this 50% area here. So we'd probably want to buy around this area and look to target. So we probably want to see market come into here, give us some bullish price action. We close above here, then we want to go up. I mean, you've got the 250-day moving average here as well. So if this probably slopes down, this would be a good area, because obviously you got these stops here around the 72 area, but that won't be a bad risk reward long in the future. I mean, if it happens this week, next week, it won't be quite bad to take that long. So yeah, I mean, so you look in here, looking around about 350 ticks. It's not bad, and if it breaks above here, then we've got those highs at 75, 73, then you've got 77, 89. So keep an eye on FTSE for the next week. German DAX. My call was bearish. Obviously, that didn't work out here. If anything, we've gone bullish now, and now we're above the 250 week moving average. For me, that's quite key. Can we carry on from here? I mean, even if you was to put, I would say this resistance area is quite key here. So we could go up to the 11,885, 900 area, see how we react. I mean, we could be going down, but I mean, looking at the economies around Germany, it doesn't look quite healthy. I mean, it's near contraction, near to recession. So DAX for me fundamentally is bearish. It doesn't mean that we can't go probably test new highs. I'm not sure. That's very much a possibility, but what I definitely want to see here is a bit more confirmation that we're now on the way from bearish price action more to bullish price action. This does look bullish. Again, if you want to be bullish on this, then you'd be looking at again, this is weekly chart, so you'd be looking at 50%, around the 11,000 area to initiate a long. But the way these markets are going at the moment. We've had no retracements whatsoever. So just keep an eye out on definitely this area. Definitely this area here. This is key resistance area, and also you can see a head and shoulders pattern here. We've hit target, so this could easily just move up and then carry on. If not, then we'll look at a alternative. Would be a breakdown. So if we come here, close it below, and then we can just drop. Okay. So that's the DAX at the moment. Let me just see if we've got any immediate trades for the DAX. I mean, to be quite honest, I'm not really interested in the DAX at the moment. Bias short term would be up, definitely. I mean, you do have the 250-day moving average sloping down as well, so it's not giving me an indication that we're still bullish. But things can change, obviously, and we want to be a bit nimble in that perspective. I want to see this trend line hold. So you could look at a pullback to here, and then see if it holds, and then go long. But that's quite risky. That's quite aggressive. But we could be looking at this as well. At the moment, you know, we've taken out these stops here. This is probably next target, which is 1169.4. So I think that'll be hit, and then we've got this area here. Ideally, if it was me, you know, wait till we get across this 11,850, 900 area. Look for, again, a rounded retest, and then, you know, look for a bullish price action to go higher. Maybe, you know, to target the 12.4, 12.5 area, definitely, you know, as first targets. Okay. Oil has been interesting me now. I've been looking at this formation for quite some time, and we're at the critical point here in oil, whether this breaks or not. So what I'll be looking at here is that. This is what I'll be looking at. I favor downside. I'll probably be going to favor this level here at the 45 level, 45.72 level. Do we make new lows? I don't know. But what I do want to see is a follow through now coming next week or the coming weeks. Again, this is a daily chart, so this is definitely something to look out for. This wedge here, this is looking to break to the downside. I mean, this could easily just meander meander up here easily, and then just go up. So this is why you want a break conviction, probably a retest, and then break down. That would be your best bet. You can go for you can short at the break, okay, or you wait for the retest, and you got that as resistance from here. Once it breaks that, you got support, and then, you know, that would be your risk, rather than this risk here. It's quite a big risk there, isn't it? So short term, let's go to 4 hours. Okay, so as you can see here, we are at that level. Okay, so this is where I'll be looking now to initiate shorts. We have resistance here at the 51.20 level. This will probably be a good target. I think these stops will be taken out definitely. 54.97. Here's a band of resistance here as well, because this was the breakout prior, and this stop here at 53 would be definitely. So short term, you can take this short. You know, look for a 200 tick profit around the 53 area, and then you've got the 52 and the 51, you know, coming in. When you see the bigger picture, a short, then you know you can then target 45.72 as the bigger picture short. I mean, some of these moves don't even take weeks, could take days. So definitely keep an eye out on oil. I'm very interested in oil at the moment. This pattern does seem quite bearish to me. Also, it helps when Donald Trump tweets out that oil prices are too high. So we'll see about that. UK oil is probably the same, seeing the same formation here as well. Okay, let's go on to some currencies now. So Japanese yen, if you think about it here, it's just been in one mess of a sideways action. It's not done nothing whatsoever. However, again, 250 week moving average is quite pivotal. If we break above, then don't be surprised if the 114 area is going to be targeted next. So short term wise, we are definitely going to be looking at bullish trades. We're above the 250 day moving average. That's a good sign. So it's quite bullish to me. The only time that I would look at looking at a bearish position is if we got this kind of movement. So we got price movement coming through the 250 day and then failing here. So we get this kind of price action here. We get this kind of price action here, then you know, this will be bearish going down. But at the moment, this looks quite solid. So to be quite honest, I mean, I wouldn't even mind if you're looking at even if you bought it at 11.9 for 260 points, even if you bought it for 200 points with a stop at 50 ticks lower, you know, it's not a bad risk reward ratio. It's like 4-1. So you know, even if you bought it at the open, wouldn't be a bad idea. So yeah, have a look at that. You know, if you want to really mitigate risk, let's go here. You know, I'm a big fan of Fibonacci, so I would say definitely you want to be buying around the 111, 20, 25, 30 area, even the 111 area. This area would be a good long for you here. This part of the area would be a good long, and then to target 114 would be very a good risk reward ratio. Again, you know, if you bought it from the 61.8, then you know you've only got about 60s, about 60 70 ticks of 60 pips of risk to potentially gain over 200 pips. So that's quite good. Yeah, I'm definitely eyeing up the Japanese yen for a long next week. Okay, let's go to pound. Japanese yen. I'm not really. It's really hard, this one. Not really interested in this one. Pretty much within this range bound between 156 124. Okay, we've got a band of resistance up here. If you just see, you can just See it right there. Look at that resistance right there. So if you was to look for a long, again, breakout, retest, and then 156. Not bad though. It's like nearly 800 pips. So maybe I shouldn't be crying over that, because that's actually not a bad trade, is it? So what I'll be looking for, okay, again, get above this resistance area here. You can see that it's been quite messy through September last year. Came down, come up, again failed. We came all the way down to the 133. I do believe that sterling could get quite strong in the next few weeks to come, and you can see here, like, we've had a strong move from that. I don't know what that was, that flash crash. It's over 1,000 ticks, pips up. It's been a phenomenal move. So again, I would look at taking out these stops here at 149.80. I would again, I would look at I look to buy right here. 144.75 would be a good buy. First target, if this doesn't take it out tomorrow, 149.60, 149.70, and then you can establish a second position, definitely around a retest all the way up to 154. Did I say 156? Yeah, there you go. So that's not bad. That's not bad. I would definitely look to take that if I do see some bullish price action. I mean, this has been, like I said, this has been resistance for quite some while. You're spanning back down to 2017 here. So it's over 2 years resistance here, and we break above that, then I don't see why not we can't go to the 156 level 100%. I think that is probably the path now to 156. So break above 149.50, round of retests, look for bullish price action, and then do a swing long all the way to 156. If we break below 140, if we break back below 148.50, then I would cut the trade and then reassess. Okay, let's look at euro. Right. Okay, let's go to euro. Before, euro was capped between this between 114, the 112, the 115 area. Now, we're still there, really. So if I was just looking at this range here, we've broken out of this range. We're looking at a retest and then broke out again. Failed. Come to retest the breakout level. People would have got long, and then it's now done doing nothing really. So fundamentally, the euro is weak. I wouldn't rule out a retest of 103, maybe the 105 area in the coming months or so. I mean, this would present a great swing long. Swing short, not swing long. So fundamentally, definitely, I would definitely look at shorting the euro. It's in much bigger trouble than people think it is. Brexit won't help it if at all, and I do think that we got more downside in euro fundamentally. Anything can change. I mean, we've still got these highs here, 125, but I do see the dollar strengthening over the coming weeks and months. And if that's the case, then I can see euro really getting hammered down. And plus, we're now back in this range, so playing that wouldn't be a bad shout. I mean, even if you let's go down to a lower time frame. So let's go down to the daily. I mean, look, what have we done here? Absolutely nothing. We've done nothing, since October. That's ridiculous. It's been doing nothing. So I'll look at a break below 112.25, and then look to go down a good 700 pips down. So I would play this as if we come down here, break support, break, and then come back down. So if we break this resistance area, that becomes support, and then we will initiate a trade all the way down. Immediately now, it's actually in no man's land. So trading the euro now, even on a 1 hour, let's just see what will we be doing. I mean, if it was me, 50% has been a good line of resistance here. We've seen it here, here, here. So we could go down to 113.24, 113.25s. We could initiate a long here if you wish, because we still got high lows, and try and look for the 114.25 area. 114 area would be a good long for a scalp, but bigger picture would be personally to look for the short underneath the 112 area. Definitely look for a retest, and then much lower, several hundred pips lower, 100%. Pound is interesting me right at the moment. I mean, if you looked at my video on the 8th of February, I actually said if you initiate a long around the 128 area, which actually I did personally, and look to target 132. So that worked out beautifully. And again, it was just very, very simple. Just Fibonacci, really. Just took a 50%, set around the 128, 127 area. If you initiate a long, look to target the 132. We actually went above that. We actually took out these stops here at 133, 133.45. But even I think mine was just around 330 pips of profit. So I'm not going to complain about that. So pound weekly, you can see how much resistance is around the 133 area. You can see where we broke down from 2016, June 2016. We broke down, come up, resistance, broke down. We couldn't get past this area here. So that was going to be pivotable. So we broke down, we went down to new lows, down to the 119, 120 area. We rose now. Again, this area of resistance, and we meandered around there for weeks until we broke out finally. Looking for a retest. Retest happened here, and it wasn't bullish, it came bearish, so we got bearish price action. Every time we have approached the 133 area, we have failed, and we did it again this week. My thing is how many times is this going to happen? Ultimately, you keep on knocking on that door, it's going to open. So my thinking is that we either, my gut feeling tells me that we will break through the 133 area, and we will start to target 140 to 140, 144, definitely in the coming weeks, maybe months. But this is getting interesting now, the pound dollar to me, because I do think, we've tried so many times to break through the 133 area. We've failed again. Does this mean this is bearish? Fundamentally, we do have fundamental bearish news, obviously with the Brexit, but I just think that it's been priced in now over the last a couple of years or so, and we can definitely look for bullish price action coming through, and I would play that again. I mean that candle doesn't look healthy, but I would still be a buyer around the 129, 130 area. So I'm looking for price to come down here, come up, and then break through second position, and then let's see what we can do. That's my plan. However, this is your risk right here. That would be your risk. And if we break below that, then I would say that the trend is done, and then you'll initiate a short to target these stops at the 124 area, 100%. So even if you take a loss in the pound dollar, so if you initiated a 123, 129 with a 200 tick stop, but the upside is quite good. It's probably just over a 1-to-1, so 1.5-to-1, which is not bad. But ideally, I'm looking for above 133, all the way to 135 really. We close below the 127, 128. Then I would say initiate a short, and this will be a much more better risk and reward. About 130 ticks, I'll stop and then look for a 123 area, for 123, 124 as a profit taking. Okay. CAD. Interesting. Pretty much in this channel. Pretty much in this channel really. Not doing much. It seems to me that, looks like a rising bearish flag, taking place. I'm seeing CAD fundamentally. It's going on in the next, what's going on in Canada at the moment. I find it fundamentally quite bearish, to be honest with you. I'm probably more inclined to sell the Canadian dollar rather than buying it. So if you was to put my money on something now, I'll be bullish US dollar towards 137 here. I find this quite bullish action, and if you see, every time we've had this bullish candle on the weekly, we've had some good, up moves, even here. So this could potentially go here up to 138. So it's all about entry now, isn't it, on the USD CAD. If we obviously break below the 130 area, 130.60 area, then we'll then look at if there's any shorts to these kind of levels. I would probably go for the 127.50 level as the first target, but ultimately I am bullish on USD CAD. And look at that move. I mean, this is 250 week day moving average, and it doesn't lie. It's there for a reason. We've poked above it. Look, we've gone poked above it. We can add a good 200 pip move. Again, it's good resistance area. Every time it's hit it, even we've just rallied off it. So here I'll be really interested now for bullish USD CAD. Right. Okay. Coming off that, I would say, whoops, here we go. I would say 132-200 area, or the 132, or maybe 131.95 would be buys, and then you'd have a stop loss around 65 pips, and to be honest, just ride it up. I think we've got about 300-400 pips in this. Honestly, I think we can go back to this into this channel. I would probably be interested in doing that, really. Taking on a pullback of this massive pullback on this massive rise. I'll take a 60 tick going up to 137. Even if you can take profits, partial profits, 100 pips, 200 pips, obviously, but my inkling is that we go up to the 137 area as a minimum to take out these. I mean, these stops here definitely resting at the 136 level, so even those would be good targets. And that's CAD. Aussie, I mean, fundamentally, linked with China, with his exports, iron ore, obviously with copper as well. I would say I think Aussie is going to be turning bearish in the future. I think we're going to be breaking this 70 support. I think we got much lower to go to. So I would be interested in shorting Aussie dollar to first target the 67 area here, and then let's see how further it can go. Even if, here we go. So this candle, obviously, I've just seen it now, obviously is taking out these stops, so it'll be interesting. But fundamentally, I think we can still go and probably take out these stops here in the coming weeks. This is a weekly chart, remember that, and I would be looking for bearish trades again underneath the 250-day moving average. We are sloping down. This doesn't scream to me bullish at all. If anything, we've had lower highs. We want to definitely looking at bearish trades. So here basically we're pretty much close to these levels, aren't we? We're pretty much close to these stops. So I'll use that as a barometer of shorts. If you're looking to short the market after that, then let's punch through it, let's retest, and then let's go and take out these stops here. And I think that's going to be the play for Aussie dollar. Fundamentally, we can go much lower. Obviously, if China starts to deteriorate with their exports as well, this is going to hurt Aussie dollar much more. And obviously, Australia is probably looking to go into a recession in the coming months, maybe a year, months or year, because this will be their first probably recession. I think I don't think they went into recession in 2008. I'm pretty sure they didn't. So yeah, their housing market is really, really messed up at the moment. So it'll be quite interesting to see what happens in Australia this year. I don't have anything else for you this week. If you're fundamentally bearish on the Aussie, then pound. Okay, sorry, yeah, one more. Pound Aussie. Now, this is a monthly, so you can see this band of resistance here was going back 2018 March. This monthly chart. So if we just zoom in, look at this. We've broke out of it last month. Okay, we're starting to retest this breakout level at the 184.50, well, 185 level, you would say. Okay, and this has been resistance since last year. Okay, and this is why I think in myself that, you know, we're going to be bullish sterling in the coming months. This has potential to really go. You know, we're above the 250-week moving average. Nice bullish candle last week. You know, this is going to be taken out soon. I'm definitely intrigued about pound Aussie in the next few weeks. If anything, you know, this would definitely be on my radar, because when this moves, it moves. I mean, like, this is the 12th of February, okay? Let's just say hypothetically, or, you know, in hindsight, you bought it. You know, it's a 1,500 pip move. I mean, this moves. When it moves, it moves. That's 2 weeks. You know, you get some... Euro doesn't even probably do that in 6 months. You know, so you get that in 2 weeks. Even here, you know, if you sold it, okay, the close of this, you know, on the 10th of July, you know, you've got a massive 1,100 pip move. It's, you know, when pound Aussie moves, it moves. So definitely have a look at this. I'm definitely bullish on this. Again, how would I play this? Okay. Right. We're consolidating now in the 4 hour. Okay. And we've had a bull flag, you know, and then we've had a rise up again. We've had a bull flag, and then a breakout. So I would want to probably go in on a pullback as usual. So if you want to be aggressive on this, you can use this swing and come in on the retest of this breakout around the 61%, around the 185.30 level. Conservative, obviously, if you're more patient, then you look at this swing here, and it comes in around the 184.60 level. Either way, I mean, I wouldn't bet the farm on this, obviously, or like any other trade, but, you know, take stabs at longs. You know, maybe initiate a quarter position, you know, from this swing low to this swing high. If that's 50-60% level, take a quarter position, and then if you get stopped out, then you've got this big swing as well. So you know, you can take stabs at it. This will be invalidation point at 182. 182 is your invalidation. If anything, but other than that, we are bullish. I mean, this consolidation here, I wouldn't be surprised if this does that. And if it does do that, then buy it. Okay. So that will conclude this week's market wrap. I'm sorry it's been a bit too long this week, but just going through some charts that come of interest. So I'll just let you guys know. So like, subscribe, and share this, and give me some comments, give me some feedback. If you want to see more charts, what kind of charts, then I'm happy to go through that with you, and we can still look at the fundamental picture as well. If you want me to look at some of those, then I will do that with you as well. So take care of yourself, have a great trading week, and I'll see you next week.